let's talk about trading options and just my personal experience trading options. And I'm going to compare that to trading leveraged ETFs. I actually just, right up front, I actually recommend for most people, if they want to trade, they're actually better off going to something like leveraged ETFs instead of options. And I'll tell you why. So first, you have to really understand options in a nutshell. What you're sacrificing is you're sacrificing time in exchange for liquidity. Now, full disclosure, every option trade I've ever made has always at some point ended up being pretty well in the money. Not everyone, but pretty much most of them. But the problem is the timing, right? The problem is the amount of times it reverses and goes against you. So that's kind of the main issue. Or I've had positions where, they didn't go in the money, let's say, but then a month later, it's too late, or a couple weeks later, they were way in the money. So with options, you have to be duly right. I mean, unless you're willing to buy options that are way, maybe months out from when your prediction is going to come true. It's like not only do you have to be right about the prediction now, you also have to be right about the timing. So for most people, I highly don't recommend it. I've also spoken to other traders that have said that really the options market is, very, very efficient. So it's kind of tough to really take advantage, whether you're, selling calls or probably selling calls would be the safest bet if you're long stock and you just, you want to collect some premiums. I've also heard an interesting creative strategy from someone where, they would sell puts on very, top tier stocks. So even if it does exercise and you have a slightly lower cost basis, okay, great. Now you own, high quality stock that you can, that you don't mind holding on to for the long term. But in terms of just trying to take advantage, like actually buying calls and buying puts, I really don't recommend it for most people. Unless you're doing maybe doing some kind of spread situations or something like that, you're actually probably better off either doing covered calls or even selling naked puts on positions that on very, very good stocks that you don't mind holding for the long term. Because remember, you're obligated to buy, but you're not obligated to sell right away. You can hold it, right? You can hold it. And in the meantime, while you're right, you're collecting income. So I will say that for most people, if you really want to take advantage of a situation, you're better off just taking advantage of leveraged ETFs or even like a leveraged ETN, right? For the exam, ETNs obviously have also the credit risk component, not just ETFs, but really they behave very similar to ETFs, so you might not even notice it on when you're actually trading in real life. And, with the leverage ETFs, they're not perfect. They're not going to reflect the return perfectly. Like if it's a 1x, 2x, or 3x or inverse, it's not going to be perfect. But for short term, it's usually going to be pretty accurate. And if you're really confident, you can always get a 3x ETF or 3x inverse ETF if you're confident of your position. And this is why the time is not wearing on you. With options, it can be very stressful where, you could be up, 2x, 3x, and next thing you know, your option position is worth nothing, instantly. All it needs is the market needs to turn around a little bit, especially if it's hovering around the strike price. It's getting close to expiration. So in general, for folks, I would not recommend buying calls and puts. I would say if you're going to do that, you should better off playing around with selling calls, maybe selling some naked puts if, especially for great stocks. And then if you're, if you're very confident and you really about a certain move, then just, play with the leverage ETFs or ETNs. So hope this video helps. Please like and subscribe and hope you have a great day. Bye.